We're back. I mentioned these calls on the street today. One of them, a bullish call on Starbucks. Upgraded to Outperform at Cowen. Goldman was added to Bank of America's US 1 list. I want to start with Starbucks. Joe, I'm going to start with you, okay? You own the stock. Now, upgraded to Outperform, as we said. They talk about numbers and EPS growth in 22 and 23 and the business improving. You know, I don't know if you listened to Kramer earlier today on Squawk on the Street. He's kind of skeptical of this call. The premise being that this was the firm's numbers, okay? Like their own coming up with the number, because Starbucks, Kevin Johnson, KJ, the CEO, it's not like he's been putting out numbers of what the business has been doing. So how do you judge that as an investor with a stock that has underperformed? I mean, year to date, for obvious reasons, year to date, it's down 1.5%. In 3 months, now it's up in over 3 months, but, you know, the business hasn't been doing great.
No, obviously the business is not going to be doing well when you create a still society. So there has been a little bit of recovery. I share the skepticism that Jim has. I think the stock, I own it. I think the stock is fairly valued, probably should sit somewhere around 85 or 90, but they certainly have to improve margins. And improving margins is going to require really an all clear on the virus itself. Yes, they have the benefit of having the strength of digital, but understand drive-thrus only are 29% of the overall business. So I agree with the skepticism. I wouldn't chase the stock right here. I think it's rightly priced where it sits at around 86.
John, if you're playing this through the derivatives market, what do you do?
You sell the calls at the 90 strike like crazy, Judge, because I mean, Pete has called this range much better than I have. Buy it at 80, sell it at 90. I'm more than willing to let him rip it away from me at 90, Judge, because, you know, this thing's been just stuck in a range. I'm happy to collect the premium for it.
Okay. The Goldman call, Joe, I come back to you because you're the only one today who actually owns Goldman Sachs. US 1 list, Bank of America, reiterate buy, price target goes to 240, multiple drivers, they say, to improve return on equity over the next few years, 20+% possible upside. Do you see that?
I did, and I also see that analysts are raising estimates for the upcoming quarter, which I believe is either October 14th or 15th. So both for FICC, you're seeing about 2% higher on the estimates. For investment banking underwriting, they're raising estimates by about 10%. So I think the expectations based on the prior quarter were low, and I think we're realizing what we talked about at the time, that there would be strength in trading revenue, strength in investment banking, and I think there will be ultimately an upside surprise for the stock.
All right, good stuff. Thanks for that.